Answers. Now, for the questions that we have done so far, right? If you can recall your memory, what did you do? We just did. Trial balances we did for new businesses. Yes. See, every time you want to have contributed as cash, other assets, etc. But this one, guys, we are going to do for existing businesses, so that we will have opening balances. And the point or the problem is how we are going to treat the opening balances in our ledger accounts. Okay? So that's what we are going to do. Okay, first we will write the note. Right. For ongoing businesses, there will be pre-existing balances for respective ledger accounts. These balances at the beginning of the period should be recorded in the ledger accounts before recording any new transactions. For opening balances, the normal rules for recording ledger accounts still apply, such as increases in assets on the debit and increase in liability and OE on the credits and so on. Opening balances are recorded in their respective accounts on the sites where they are recorded when such items increase. For example, opening balances of assets are recorded on debit sorry?
So like for example, whichever side increases, it goes on that side.
Yes,
So
correct.
expenses increase, then it's
Yes, you are correct. Of assets are recorded on debit not this one is it, right? And those of liabilities on credit. Right? Cross reference for opening balances is stated as simply the balance. Okay. Right.
Wait, is there a balance account?
Balance account? No. Actually, balances we are going to deal with that later in somewhere called general journal, which is the same thing. Right? So general journal I'm going to introduce it today. Right? Okay. Now, do you want to read this one or you guys okay with this? For opening balances. Okay. Yeah. So what is happening? If we have an opening balance, right? Which side do we record then?
whichever side the increase.
Whichever side those items increase. Yes, that's it. We will treat them as the particular item increases. Right? That's it. Right? If it is bank, right? We had an opening balance. Usually bank is, unless stated otherwise, it is debit. Yes. If it is a bank overdraft, it will be credit. It will be given. And then on the other hand, inventory, accounts receivable, premises, they will be recorded on the debit side, whereas liabilities, right, owner's equity will have, capital will have on the credit side. And the cross reference will be disbalance. Right. Okay guys, before we do the errors revealed by the trial balance, we'll do there are some double entries.
Wait, can they be? So this is just for just in case trial balance is wrong. But can they give you like situation where trial balance is wrong?
Yes. Yes. Sometimes, yeah. Sometimes basically they will given us the mistakes, and we are doing it separately. In the textbook it is chapter 7 as I remember. So we'll deal with that when we do it. Okay. Right. Purchase returns, guys. Right. Take down the double entry for purchase returns. Do you remember purchase returns?
Yeah.
We did in unit 2. Yeah. Especially in the inventory card. Okay. Don't worry. This one is the exact reversal of the double entry that we did for the purchase of inventory on credit. Now, can you recall the double entry for purchase of inventory on credit?
Inventory debit, GST clearing debit, and accounts payable credit.
Credit. Anything else? Is that correct? Yes. Then with when the return of inventory, what do we do?
Debit accounts.
The reverse. Now you can ask me, what about the return of inventory that we had purchased in cash?
We don't deal with it.
Why not? Yes, we don't deal with that in your style design. It's not there. Okay, meaning it doesn't mean that it is not there practically. Yes, it is there. It doesn't mean that if we purchase something in cash we can't return it. We can, but in our study design we don't deal with that. Okay. Right. Same thing for sales returns, guys. Sales returns also we just deal with the sale of inventory that was made on credit. Cash sales of inventory, no, there is no such a thing. Okay, now, right, the reverse of the double entry for the purchase of inventory on credit is what? You debit the accounts payable. If you want, I can give you amounts. Then credit inventory. Credit GST clearing. Exact opposite. So that it's not a big deal. If you know the double entry for the purchase of inventory on credit, pretty simple. Opposite. Now sales return is little bit complicated. Okay? Right. Any questions with this? Yes, usually like practice is Varun, we record the inventory first, then GST, right? Like for recording is all for recording also it's easy. Why? You just take 10% of the inventory. Yeah. So usually that's the practice. Right?
Is GST clearing the same as GST balance?
GST clearing is same as GST balance. No. GST clearing is the name given for the GST ledger account, which can be either debit balance or credit balance. usually credit.
So, you know the one we reported in the balance sheet, like GST payable?
Yes.
So is that different from this?
Yes. Basically, we did GST payable receivable in unit 2, 1, 2. Now, we are kind of advanced. We are saying GST clear.
So no more GST payable?
No.
Even in the balance sheet?
No.
Is there a balance sheet?
Yes, of course.
So you're right, GST clearing there?
Yes.
Even if it's a credit balance.
Yeah, so even if it is a credit balance, GST clearing on the under the current liability. If it was a debit balance, like I think our previous question is, so we'll have a GST clearing on the debit side will be reported under accounts. Sorry, current asset.
Wait, as a debit.
Yeah. Why? Because if we have, remember the previous one?
Wait, GST is liability, right? So
Yes.
it's a debit balance.
So imagine the bank account, same thing. But there we call bank overdraft, but this one we don't call anything. We just say GST clearing under the current assets.
GST is usually credit balance.
GST clearing is usually credit. Why is that? Yes, because why do we have more GST liability?
Because you make more sales.
We make more sales than we purchase. Yes, that's why. That's why, meaning that means we are making a profit. Yeah. Okay. Any other questions? Right. Okay. At selling price, guys, sales return. Right. Now this one. Now just recall the double entry for the sale of inventory. Sorry, I have made a mistake. This should be credit, guys. Okay, not cash. Should be credit. Sales returns of inventory on credit with GST. Right. So then, what happens? Selling price or reverse. What is the reverse?
So you debit sales, you
Debit sales, debit GST clearing, and credit accounts receivable. Right? Don't write. Okay? Yeah, except one change. What is it? Instead of reversing the sales, we will have a new ledger account. Debit.
Sales return.
Yes, very good. Sales return. Who said that? Okay, good. Sales returns. Okay? Sales returns. Okay, that's a theory question actually. Why we have a separate ledger account for sales return? We'll discuss it later. First, we'll write it. Debit, GST clearing. Okay, we'll put the amount 220 and we credit the accounts receivable 220. Then at cost price, guys, what is happening? Cost price, that is no problem, that is reverse. Yeah, what is happening at cost price?
So even debit inventory.
Debit inventory. Why we debit inventory, Harry?
You just let it slide.
Yes, what happens to inventory?
Increases.
Increases. Why? Because our customer returns it. Yeah, our inventory increases. So you debit inventory, credit, cost of sales. Our expense is decreasing. Expense decreases, credit. Okay, now the point. Why do we have a separate sales returns account? Right? Why do we have a separate sales return? We didn't have that one in purchase returns. We didn't have a purchase return account, did we? Yeah, we just simply reverse into the inventory. But this one, we didn't do that. Why didn't we reverse it? Or why do we have separate ledger?
Does the business need to like analyze how much sales returns they have?
Yeah, why do you want to analyze it?
To say like how many products are like effective or like.
Yes, for in terms of like characteristic.
Pros.
Sorry? understandability.
Relevant?
Yes, mostly relevance. Why? Because as he said, if we are making like, so basically owner wants to know what happens to our sales return, whether it is increasing, decreasing. If it is increasing unnecessarily, there is something wrong, something fault with the quality of the inventory. Isn't there? Yes. So something wrong with our inventory. Yes, effectiveness. Right? They are faulty. Then we need to make decisions. Maybe we'll have to figure out what the issue is, right? Or exactly which inventory line, right? So then we'll have to change the supplier. So then owner will make those decisions. So basically owner wants to know what is going on with the sales return. Yes. So yeah. Mainly it is balance. Yeah. If they ask the second reason, yeah, understandability is correct. Fine. For decision making purposes. Right? Otherwise, like had we simply recorded in the sales account, like no one can find it, right? Nobody can find it. Sales returns. Yes, it's like not there. And why? Because at the end we are just recording the sales. So when we have a separate ledger account, it will be coming in the trial balance, and also it will be reported in our reports. Okay, guys. Right. Then okay, what would be the double entry for GST settlement?
GST clearing debit.
GST clearing debit and bank credit. So we debit the GST clearing and we credit the bank. So if I drew a ledger account for GST, okay. So if it is a settlement, guys, what kind of a balance we would have? Debit or credit balance? Credit balance, yes. So we'll have a balance, let's say 1,000. Right. We'll have a credit balance. Then what do? We are paying it off. What will happen? Bank is crediting. Bank is an asset. Asset decreases credit, and we will debit the GST 1,000 here, saying bank. Then what will happen? Gone. This is done. 0. Okay. Right. Next one, refund. What will happen to the refund, guys?
Debit bank.
Debit bank. Why is that?
Because you're receiving money.
We are receiving money, and on the other hand, we are crediting the GST clearing. Yeah, this one again, typo. It should be just drawings, okay? Not GST drawings. There is no such a thing. No GST drawings, okay? Right. What's a double entry, guys? So if it was cash, we will credit the bank. If it was inventory, we will credit the inventory, okay? So we'll debit drawings and credit bank / inventory. Okay, either bank or inventory usually.
Anything else?
Yes, sometimes if we had something else also, then we can record. Let's say owner withdraw a motor vehicle, we can say motor vehicle. Okay. Right. Any questions? GST drawings. Yes. Yeah, it's like ATU, the owner of the ATU. Yes. Okay. Alright, guys. So I had to introduce you the general journal as well. Right. Now, general journal, don't worry. You have, you already know what it is, right? Basically, remember the analyzing chart? Yes? Okay. Analyzing chart. Yes. Analyzing chart, I think I told you. If you cross out these two columns, the rest is general journal. Okay? Alright. Yeah, now have a look at the general journal. This is the general journal. Okay, so we have the date, the account, debit or credit.
How many marks is usually a journal journal?
That depends with the number of entries. Right? So general journal, guys, we are going to come across. How many journals have you done so far? 4. Yeah. So we are not going to come across those ones mainly. This is the journal that we are going to deal with until you finish your course. Yeah, so this general journal, ledger accounts will be your best friends in accounting. Okay? Right. So general journal. Let's write it, guys. General journal is an accounting what? Record. Analyze and record each transaction and to identify its source document before posting to the general ledger. Next on narration.
What does posting mean?
Posting means you're recording in the general ledger. So remember like what we did, firstly we did the analyzing chart, then we recorded it into the general ledger, which we call as the posting. Yep. Then narration. Narration means, narrator.
Yeah.
Yes, like the narration is a brief description of transaction recorded in the general journal, including a reference to the relevant source document. Right. Please read the question and let's start it, guys. Do you need a break?
Yeah.
Yeah.
Number 3. We change that clock. It's
Okay, guys. Right. Please read the question.
Calculate.
So you add the answers manually, then you solve the
Who is missing the calculator?
Huh?
Who doesn't have the calculator? Yes, Varun. Where's your calculator? Make sure you bring the calculator.
When you're writing the opening balances, like, would you write 30th of May or first?
Yes, that's a good question. Which one do we record?
30th of May.
No.
Or wouldn't you write 1st of June twice? Because of the transaction.
Wouldn't you write first of?
1st of June twice.
Why?
Because there's a transaction.
Okay, I'll show you then. Okay? Yeah, firstly, right. Shall we record, guys, the opening balances? Yeah, balances on when are the balances given? As of when? 1st of June. Okay, so let's start with the 1st of June. Bank 1500. Right, then what do we do? June 1st. Balance 1500.
But what about the general?
General journal, we don't deal with this at this point.
Right?
Okay, just we are recording the transactions, not the balances at this point.
You put the lines.
You put the sorry?
Like the lines. You need to do the lines.
Double line.
Oh no. That balancing part is for the previous period. We are starting from the 1st of June. Yeah, it's like, what is it? We don't have, like, if I show you the previous ones, right? For example, yeah, so something like this. For example, yeah, now see bank account. It's like we are starting this. See, December 1st balance.
Yeah.
See, the bank account. We don't have the previous thing. It's missing. Exactly like that.
Wait, what's the significance of the lines?
Yeah, significance of the lines. It will help us to calculate the balance for the next period. But when we start for an ongoing business, now see, what did you read the question? What is happening? Rebecca owns a shop. Yes, Rebecca has been operating for 3 years, but on 1st June 25 decided to adopt a double entry system.
Yes.
She didn't have it. Now she all of a sudden she is starting a double entry system. That means the first entry in a ledger account for this business will be that.
Well, like GST, right? There's no opening.
Make sense?
Yeah.
For GST, there's no opening balance, right?
GST there can be opening balance, but not in this one.
So that means would you put like a dash or something?
No, you don't have to worry anything. You just start with that. Okay? Yeah, if it is not there, you don't have to worry. Okay. 1500. Then next one, inventory 5000. Inventory 5000. Then accounts receivable, how much? 8,000. Right? All of them are debit, yes? Why? Because they are assets. We treat them as if those items are increasing. Yep. Clear? Okay, Krishan? Next one. Shelving. Also an asset. 16,000. Shelving. What is shelving? Yeah. 16,000. June 1st balance. And then loan. Loan. How much? 6,000, yes. That one is credit. That is credit. Why? We treat it as the loan is increasing, liability increases credit. Okay? Right. That is done. Then we have to find the capital. Yes? Capital is going to be 10, 18, 23, 24, 500?
Yeah.
No?
Right, I have a question.
Yeah.
Are we going to do the income statement together as well?
Yes. And balance sheet.
Balance sheet.
Yes.
Just balance sheet. Wait, no, not for this exercise.
This one. I mean the next one. That's for home.
Oh.
I mean if you want we can do the balance sheet. For this one as well. Okay. Capital also guys, what is it? Which side? Credit test. 24,500. Right. Okay guys, now we'll start transactions for June. Part B, record the transactions. Yeah, what are you doing, Harry? Stop it. Transactions for June 25, yes, should be recorded in the general journal, part B. Right? Okay, now this one, first one. Received 2,000 cash from accounts receivable. Linux for inventory sold in May 25. Alright. What's the double entry, guys? So if it was inventory sold in May, shouldn't we have recorded this one in May? No. The sales, credit sales occurred in May, but now we are receiving money for it. Yes? Okay. What's the double entry?
Bank and accounts receivable.
Very good. Bank. So then June 1st. Bank debit 2,000. Credit accounts receivable. Now we are missing those middle section, yes, two columns. That you have to deal with that in your head. Right? It doesn't mean that those two columns are missing, they are in your head now. Okay?
Yeah.
Don't delete from your head as well, okay? Right. So they should be in your head, right? 2,000. Now what is it? Bank is an asset. Asset increases, debit. Accounts receivable is also an asset. Asset decreases, credit. Good. Right. Shall we record it, guys, in the ledger account? Okay, remember I told you there is a narration for this. Please have a look. Okay? Have a look, everybody. Right? Narration. Narration is a brief description, guys. Don't write anything, okay? Don't write anything. Don't write. Don't leave it. Don't worry about anything. Okay. Now we would say, right? What is the transaction? Remember, we said that narration is a brief description. Receipt of cash from Linux. Yes. We can give the whatever the receipt or the EFT or whatever, source document reference. Don't write this, because why? I'm just showing you what we are going, because I haven't given you the source document references yet, because at this point I don't really expect you to do this one. At this point I want you to be perfect in the double entries. That's it.
You have to be word for word in narration.
Sorry, word for word?
In narration.
What do you mean?
Like, when you do the narration, right? Is that you have to write exactly that?
No. And also don't write essays. Right? Short and sweet. Try to limit it to one line, because otherwise, especially in the exam, they give like one line to write the narration. That's it. Basically, that's what I would write. Right? Short and sweet, like what has happened. That's it.
What if there's like multiple sales, cost of sales?
Yes, but still you have one source document reference. Why? Because even though we make a sale, how many source documents would be there for that transaction? So that means one narration. Actually, in the future we'll have about 5 or 6 sets of double entries. Still we have one narration.
What about like drawings?
Drawings also one.
All this going into the cash.
Yeah, for each transaction there will be one narration. Okay, right. So I'm going to rub this one. Okay. Yeah, later we are going to deal with that. I'm just letting you know, because otherwise if you did in at school, then you might think Eranga didn't do that one, so he has forgotten. No. Okay, at this point I'm just focusing on the double entries. I don't really care about, because like that one, usually the students are okay, and also mostly they don't ask in the VC. It doesn't mean that we shouldn't write it. We should practice writing it, because at any time they can ask. Okay, so the double entry, guys, we recorded this. No, we didn't record. Bank, what happens? 2000 debit. June 1st still. We don't have to repeat the date if it is on the same day. Right, you are saying accounts receivable. Right. This one we have to write the name of the one. Right. Yeah, accounts receivable hasn't been named. So June 1st again. Bank 2000. We are crediting. Right. Next one. Rebecca contributed her laptop to the business, fair value 2500. Yeah, what do we do, guys? June 3rd. What do we write as? Computers 2500. And where do we credit? Capital. Rebecca 2500. Then the ledger accounts will be capital. We credit saying computers June 3rd, yes. And then computer, do we have computers 2500 saying capital. Okay. Right. purchase inventory worth of 1900 plus GST on credit from Laker. So what's the double entry, guys?
Inventory, GST clearing.
Inventory,
Accounts payable.
1900. GST clearing also debit 90. And then you credit the accounts payable, Laker, 2090. Then inventory, what happens, guys? Inventory, we debit 1900 saying accounts payable, then GST, what happens, guys? Sorry, increase,
On a decrease.
debit or credit? Debit, saying what? Accounts payable, right? And then we are crediting accounts payable 2090 saying what is it? Yeah, inventory slash GST clearing. Okay. Am I too fast? No, not fast, yes. I'm slow. Yeah. Yes. Okay, actually, guys, for you it's very simple. When I was doing my VC, I had to draw all these ledger accounts. Yes, they just gave me like blank paper. That's it. Yeah, this trial balance, and then what else? Income statement, everything. See, you guys are lucky, aren't you?
We draw the
Yes.
line every
Everything. And trust me, I didn't use a ruler. I have never used a ruler in my exam. Yeah. Yeah, trust me.
Why?
Because it wastes time.
Waste time to use a ruler.
Yeah. Because see, you are going to use a ruler, everything, Not fine. Okay. Right, next one, guys. What is it? Inventory was sold on credit to Kenny 4,000 plus GST. Cost price 600. What should we do? Tell me the double entries. Yes, tell me the double entries. Accounts receivable debit.
Sales, GST clearing.
Accounts receivable Kenny debit. How much? How much? 1100. Then sales credit 1000. What else? GST clearing 100 at the selling price. Then we have to do the cost price. What's the double entry for the cost price? Is Sanya inventory? Yeah, inventory debit or credit? You sure? Inventory is credit. Okay. Inventory is decreasing. Cost of sales and expense increases 600. Inventory decreases 600. I know, like, you don't have to be perfect, okay? But you guys have to practice this one at home. Right? Get the question, draw these formats somewhere else, and do it. Okay, that's the practice. Otherwise, you won't get the speed. right? Because why? Everybody who is like most of 99% of the people who are doing accounting can do this one, yes. But then what you have to do is like if you want to be competitive, what do you have to do? You have to improve in your speed, right? That's it. Remember I told you, for you to improve the speed, you have to increase the speed in reading, writing, processing, right? Everything, right? So to increase the speed, what should you do? Drive fast. Huh? No, don't drive fast. Right. Yes. Right, accounts receivable, guys. You debit 1100 June 5th, saying, what is it? What do we say, Krishan?
Sales dash GST here.
Yep. Right. Then GST clearing is credited June 5th, saying accounts receivable then sales will be credited June 5th, accounts receivable 1000. Then inventory will be credited 600, saying what? Cost of sales. Then cost of sales is debited 600, saying inventory. Next one, guys, return to Laker 500 worth of inventory plus GST that was purchased on credit. What's the double entry for that? For the 6th.
Accounts payable.
Accounts payable. Accounts payable debit, how much?
580.
Yeah, why did we debit accounts payable?
That's the destination.
That's the destination? Yeah, why did we debit?
You just return it.
What happens to accounts payable?
Decrease.
Yes, accounts payable is a liability decreases debit. Remember the thing that we did? The middle section, middle columns of the analyzing chart should be in your head, okay? Don't delete them. Alright? Should be using that. Alright, that's the basis. Then we credit the inventory. Inventory decreases. Yeah, why does the inventory decrease? Because
Increase in assets. Returning revenue.
we are returning. When we return,
Decrease.
yeah, so I said decrease, yes, credit. GST clearing, what is happening, guys? GST clearing? Yes, why do we credit? GST clearing is increasing. Why?
Because you return
Yes, because when we purchase, we meant to pay, yes, our GST decrease, right? We meant to pay less GST, but now we are returning it. That means basically, yes, reversing. So we have to pay more GST right now. Harry, can you stop it, please? Stop playing with that. Okay. Then we'll do the recording. Inventory, what is happening? Decreasing 500 June 6th, saying accounts payable, yes, accounts, then GST clearing credit saying accounts payable, and then where do we record it? Where is accounts payable? Did I go past? Yeah, accounts payable will be debited 550, saying what? Inventory / GST clearing.
Next one.
Right. Next one, paid wages 900. Yes, what's the double entry, guys?
Wages and bank.
Wages and bank. Thanks. Wages debit 900. Is there GST here for wages? No. Right, bank. We credit 900. June 7th, saying wages, and wages debit, yeah, wages debit 900. June 7th, same bank. Next one, guys. Kenny returned half of the goods sold as they were faulty and gave a full refund. So no amount is given. Mistake? Half of the goods. Yeah. So when did we sell to Kenny? On the 5th. Yes. 1,000. So from 1,000. He's returning, or they are returning half of that. So then what's the double entry, guys? Yes, anybody want to volunteer?
Sales return.
Sales return?
Yeah.
Okay, we'll give to someone else. Varun, you want to try?
Sales return debit.
Sales return debit. I couldn't explain you one thing. What is the sales? I mean, you guys know already. What is sales return, guys, in terms of a classification?
Negative revenue.
Negative revenue. Very good. Negative revenue. So similar to expense, but don't call it an expense. Negative revenue. Okay. Right. Sales return. So revenue increases credit. Negative revenue increase debit. Opposite. Okay. Otherwise, you can say like sales return is a revenue decrease nature of account. Okay. Sales return. Debit how much? Varun?
1,100.
No. Half of the.
550. No.
Yeah, 500 only. Right? Because the sales was 1,000. Yes. Yeah. Then what else? GST clearing debit. Yeah. Why do we debit GST clearing?
Because it's like returning, so it's increasing.
GST is
Increasing.
GST clearing increases,
No, decreasing.
decrease. Yes, because when we sell, GST clearing increases, but when the customer returns it, so the GST liability that we should have paid decreases. So then GST decreases. And where do you credit? Accounts receivable. So this is in the which price? Yeah, credit. Which price is this?
Selling price.
Selling price. Yes. Who wants to say the cost price one? Son, I want to say cost price. What happens?
Inventory
Inventory debit credit.
So
Oh,
increases, so it's
Debit. Inventory is increasing. Why? Our customer is returning, so that our inventory increases. Asset increase debit. How much? Half of that is 300. And then where do we credit? Cost of sales. Why do we credit it? Expense. What happens to the expense? That's going to?
it's going to go credit
Yeah, credit. Why do we credit it?
because it's an expense and it's increasing.
Expense increases. Expense increases credit. Sure.
Nice.
Yeah, expenses. Expense increase, debit is. But at that point, what happens? Our expense decrease. Yes. Why? Because when we make, listen guys, this is important. Even the same mistake you can make. So when we sell, what happens? We create an expense. Yes. But when the sales is returned, so when the sales is cancelled, what happens to our cost? I mean, our expense decreases. Yes. Expense decreases. Yes.
think about the inventory.
Yes. Tell me, when expenses decrease, what happens?
Expenses decreasing.
Expense decreases credit. Yes. That's why we are crediting the cost of sales. Okay, always guys, at this point, I mean, not at least, if not now, at least when you go home and practice, think, right? Recall your logic for that one. Because then only what I always say, what I'm trying to do here is train your brain. So to train our brain, you have to repeat the same story, right? Otherwise our brain doesn't get familiarized with the system, because this is a new system that hasn't been done before, yes, in your life, right? So then new thing, so we have to train our brain.
We have a question.
Yeah.
But can we be asked to do a general lecture without a journal?
Yes, that's what I'm going to do next question.
Oh.
Yes, is the general legend done there? For the next question? No.
So we went from analyzing chart to journal now.
Yes. One by one, it's getting cut, yes?
Yeah.
Yeah, so see, so I have designed this one in a methodical way. Yeah, that's so that you get used to this system. So then wherever the examiner is questioning you, we are ready. Let them come, yes?
Yeah.
We are ready. Okay guys, sales returns. Sales returns, yeah. See, I have written negative revenue, okay? Minus R. Right, so we debit June, what's the date? 7th. June 8th, yes. We debit 500, saying what? Accounts receivable. Right? Then what do we do with the GST? 50 debit. Accounts receivable. And we are crediting accounts receivable 550. Saying what? June 8th. Yes, Anya, what do we say here? 550 we credit, saying?
GST clearing and sales return.
Very good. Sales returns as GST clearing. Okay, next one, guys. The cost price. What do? We debit the inventory because our inventory increases. Saying what? Cost of sales. Our cost of sales is decreasing. Saying what, Harry? Inventory. Right. Done. Next on cash sales 132 including GST. Cost price is 80. What's the double entry for that one, guys?
Bank sales, GST clearing.
Bank, sorry?
Bank sales, GST clearing.
Bank says GST clearing. Very good. Bank debit, how much, Christian?
132.
32. Then where do you credit?
Into sales.
120
120.
and GST
12
12. Why do we credit GST?
is your selling and you're receiving money.
We are collecting our GST liability increases. So cost of sales is debited 80 and inventory is credited 80. Also, guys, imagine we are going to write a narration for this. How do we write it?
Cash
Right,
sales.
it's
Cash sale, yes, cash sale of inventory, yes, sorry, that's it. Yeah, cash sale of inventory, wonderful, that's it. So receipt, whatever, receipt toy, of course, 10. I think I know like some school teachers say you have to say cash sale of inventory 120 plus GST. I would add plus GST, cash sale of inventory plus GST, but the rest we don't have really right. You know, the cost price is 80, selling price is 120. Not really important. Why? Anybody can see that. Why do it right again? Right? It's kind of dumb, I think. Right? Because why? See, anybody who knows accounting, anybody can see that one is sales 120, cost price is 80. Right? I think your school teacher, I know some school teachers ask you to write. I would add here cash sale of inventory with GST, right? Receipt number. That's it. Anybody wants to know like more details? I'll go to this receipt and check. Right? Yeah. That's it.
maybe it's like a summary. It's like,
Yeah, summary.
Just keep it.
Yeah, summary. Brief description. That's it. You don't have, as I told you, you don't have written essay. Right? Okay.
that mean sales can never be debited? Because it's always going to be sales.
No, sales is never debited unless there was a mistake.
Oh.
When we are going to, there is something called correction of errors. If sales were recorded incorrectly, then we would debit, otherwise no.
Would that be Mr. Lisa?
Yeah, debiting sales will be there. Yeah. Okay, 16th guys, they received 400 from Kenny. What's the double entry? Bank debit. What do you credit? Account receivable. Kenny. $400. Uh, 20th. Purchase extra shelving for $35.20 cash with GST. Yes. You guys are okay with that?
Is with GST and then including GST?
Yes, correct. Sana, can you tell me the double entry for that? Shelving, yes. Shelving debit, how much? 3200. And you'll then next one. GST clearing, debit, debt, credit. Debit 320. And you credit the bank. $35.20. Bank we are crediting. $35.20 saying shelving / GST clearing $320 bank and shelving 3,200 20th bank. Next one guys, paid 700 off the loan, CF Bank. What's the double entry for that?
Loan CF Bank.
Loan CF Bank. Why do you debit, which is debit credit?
Loan
Why?
Because it's a decrease in liability.
Very good. Debit, and you credit the
Sales.
sales
Or in not bank.
bank. Why?
It's in
Bank is
cash basis in bank.
bank is an asset decreases. Good. Very good. 725th loan. CF Bank. You are right exactly same way, guys. Okay, in the bank account, right? Loan CF Bank. I think loan. That's how the loan account has been given. Where is loan account? Yeah. And then loan is credited. Sorry, loan is debited. 700. Same bank. June 25th. Right. Second last one. Inventory was sold on credit to Johnny's dog wash. 550 including GST. Yes, guys. What's the double entry? Christian?
Accounts receivable, debit, inventory, credit, and then
No. You are confused. Yeah. So accounts receivable, debit. Okay. Is that Johnny's dog? Right. How much? 550. Yes, with GST. Then what's the next one?
GST clearing.
GST clearing. Yes. Credit.
Credit,
Yes. Don't help him.
and then sales.
Sales. He said that. How much sales?
Sales 500.
500. Debit or credit?
Credit,
Why?
because the selling
Yeah. So what happens to the sales? Sales is a increase. So
revenue,
revenue increases.
credit.
Credit. Yeah. Yeah. If your friend is helping you, it's not really helping. Okay. Right. Okay. Then what is the next one? Next set of double entry, Krishan?
Cost of sales,
Cost of sales, debit, credit.
and
Sorry. Credit, debit. Why?
because it increases, and then
Increases what?
increases
What is cost of sales?
cost of sales is expense.
Expense increase. And what is the other one?
Inventory.
Right. 380. So accounts receivable, debit, saying what? Yep, saying what?
Sales slash is
And sales 500, saying accounts receivable. Right. Next one, GST. GST on the
to trial balance. Oh, jeez. If it works.
Then cost of sales, guys, we debit 380. And then inventory, credit 380. Last one, wages 900. Yes, Varun, what's the double entry for wages? Yep, bank credit. Good. Right. We are done with this. Now it's a matter of balancing, guys. I think this time it's a bank overdraft, yes?
Yeah.
0
So
to.
on the trial balance, would you just say bank or on a U right?
Yeah, you can say bank, yeah.
You never switch until like next period, right?
Come again?
When do you switch?
To bank overdraft.
Bank overdraft when we report it in the balance sheet.
Oh.
1430, 6020, 6020, so 8, 4, 8, 6, 10, 11, 9, inventory account, actually there is not enough space, guys.
I have 2 spaces down.
Yep. Okay, we'll do it like this. 200, 7200. Right, so the balance it's going to be 0, 16, 4, 2, 8, 5, 13, 16, plus 6, 22, 5, 6, 40.
Yeah.
Right, so July 1st, balance 5, 6, 40. GST debit side is higher.
Wait, so could you scroll up?
Yep. For which one? This one?
Yeah. Yeah, it's fine.
No. Nine 650 0 0 716 6700. Sales return computer, you don't have to worry balancing because they are just, one item. You don't have to really worry about it. Yep.
Isn't the balance meant to be on the other side for the
For which one?
The loan.
Which one?
The loan.
The
Loans.
loan?
Yeah.
No, because loan is a liability. Liability will have a credit balance. Yes. Why do you think it's the other side?
No, because like for all the other ones,
Yeah,
like,
but
the June balance and like the July balance were like on opposite sides.
June balance and July balance
They were like on the other side,
for which account?
like accounts payable,
Yes, accounts payable. What happened?
computer sales return.
Yeah, accounts payable and loan, they are compatible. Why? Well, they are both liabilities.
Yeah.
See, accounts payable we have a credit balance. Yes, opening balance is credit. Then loan also we have a credit balance. Then what is the other one you said? Shelving. Yeah,
Yeah.
shelving is an asset.
Yeah.
So assets will have an opposite balance.
Okay.
Yeah.
Yeah.
What is shelving? Yeah, it's here. Shelving. See,
Yeah.
we have a debit balance
Yeah.
because it's an asset.
Okay. Yeah. Yeah.
Alright, guys. Then we'll record the items. Bank. It's a credit balance. Bank 1988. Credit capital 27,000. Then inventory 5640. GST clearing 348. Accounts receivable 6700, shelving 19200. Then sales returns 500, computer 2500. Accounts payable 1540, sales 1620.
Did you add another account?
Then cost of sales 760, loan 5300. Wages 1800. Was it 37,448?
Yeah.
Yeah, balance into 37,448, guys. Right? Okay. Everyone is okay with this? Any questions? No? Okay. Shall we do the income statement? Right. What do we need for the income statement, guys? Sales 1620. Take away sales returns 760. Yes. So we have net sales 860. Cost of goods sold, we have only cost of sales. Hold on, I made a mistake. Sorry, this one is 500. Right? This one is 1120. I confuse cost of sales and sales returns. Cost of sales is 760. As a result, gross profit is 360. Yeah. Then we don't have any inventory related expenses. Other expenses we have wages and is that all? Yeah, only wages, yes? Yeah. Wages is 1800. So then it's a net loss 1440. Good. Now if you want, we can do the balance sheet for this one as well. Why? Because you have to take the rest. Yes, we have assets, liabilities and owner's equity. That's it. Are we going to do the theory questions now or later? Later.